Welcome back. It's time now to take a look at the top business stories. Tamwheel shares resume trading. Expats in the UAE remit 11% more money to their home countries in 2010. And US and China focus on common ground as talks between the world's superpowers begin. Let's look at the equity markets first. The UAE bourse is traded in opposite directions today. The DFM General Index gained 1.2% to close the day at 1,606 points. Most shares ended the day in green territory, such as DP World, which gained 1.3%, the DFM itself, which was up 3.9%, and Dubai Islamic Insurance, which rallied 2.5%. Emaar Properties, a heavyweight in the index, gained 4.2%. Union Properties, however, was one of the best performers with a plus of over 7%, as net income in the first quarter rose fourfold. Tamwheel, who resumed trading today since November 2008, dropped 10%. Volumes picked up significantly. 142 million shares were traded, valued at 178 million dirhams. And over in the capital, the ADX General Index was down 0.2% to fall to 2,670 points. Worst performing sector was the industrial sector, with Union Cement Company dropping nearly 8%, while Gulf Pharmaceutical Company was down 5.9%. Stocks to gain were Dana Gas, for instance, which was up 1.5%. And First Gulf Bank rose 1.9%. 51 million shares were traded, valued at 96 million dirhams. And let's now take a look at the GCC equity markets. The country's main benchmarks ended mixed today. As we have just seen, shares in mortgage provider Tamwheel are trading again for the first time since 2008. They are down 10% on the DFM today, but not as much as some investors feared. Analysts expected the mortgage lender's shares would fall by much more, by 30% maybe. The drop of only 10% is therefore seen as a positive sign, as buyers on the stock emerged after the initial relief of the ability to sell was over. Also, Tamwheel has the backing of the Dubai Islamic Bank. It stepped in to prop up the company last year when it acquired a majority stake and provided new funds so Tamwheel could begin issuing mortgages again. In 2008, Tamwheel seeked government support and stopped lending as the Lehman Brothers bankruptcy froze global credit markets. Expat employees working in the UAE last year remitted 11% more of their hard-earned dirhams to their home countries. That's according to the UAE Central Bank's annual report. It showed that in 2010, expats transferred a total of 39 billion dirhams compared to 35 in 2009. One of the reasons behind this growth was the slide of the US dollar, to which the dirham is pegged. A decline in the dollar against other currencies like the Indian rupee or the Philippine peso means that the expat worker will have to send home more dirhams to remit the same amount in his home currency. India, for instance, receives around $49 billion worth of remittances, 12% of which come from the UAE. The country is currently the largest recipient of remittances in the world. After a hefty sell-off last week, investors are getting back into commodities as prices are starting to bounce back. And this week, although some question the timing of launching a commodities index, FTSE Group, a leading global index provider, announced the world's first Shariah-compliant physical industrial metals index series. June Wrigley has this report.
The story for commodities as an asset class is a relatively young one, but today it is a story that can't be ignored. Commodities are now an investment class of their own. Last week's sell-off across the commodities sector raised some concerns, but it seems the long-term big-picture story continues to show support for hard assets as emerging market development and infrastructure demand, especially from China and India, continues to grow.
Commodities have become an accepted asset class due to their diversification benefits in a portfolio, because their returns are time mismatched to stocks and bonds, as well as due to their inflation hedging characteristics. It's also, basically, if you look at it, the global economy is reflected in the price of commodities. So as we've seen over the past couple of weeks, as we've seen tremendous increases in commodity prices, like we saw in oil and some of these other commodities, and then we've seen obviously the decrease, and that's kind of due to certain economic factors. Likewise, there is some effect to interest rates in the marketplace and the global economy.
As investors use commodities as a hedge against inflation, there are a number of commodity indices already available on the market, such as the S&P GSCI, the UBS Bloomberg CMCI, or Rogers International. But FTSE Group are the first to offer investors a Shariah-compliant physical industrial metals index.
The traditional offerings so far are all based on futures contracts. This is the first index which is based on physical metals and therefore is Sharia compliant and therefore can be used by investors who choose to invest along Sharia lines. And I think that's the key and significant difference. The target clients, I think, are going to be right across all spectrums. So it'll be from the big institutional investors, whether it's the big asset owners and pension funds, possibly sovereign wealth funds, and in this region, the family offices, right through to exchange-traded fund issuers, through exchange-traded notes possibly, and then we'll see, hopefully, into retail products. So I think it's right across the whole spectrum.
In addition to creating a more accessible product for those investors who believe in the long-term upward trend of the commodities sector, indices such as the FTSE Physical Industrial Metals Index seem to provide other benefits versus simply investing in individual commodities.
Most investors, when they look at a new asset class, they gravitate towards indexes. It gives them the ability to basically buy the market, as opposed to saying, oh, gee, I want to invest in copper, or I want to invest in aluminum, or oil. It says, you know what, I want to buy everything. It's the easiest way to go about it. And the beauty of an index is that it's basically a passive and systematic approach to the asset class. You don't have to make any timely decisions. The index is based on rules. It's very transparent. Everybody knows what they are. And it takes that whole level out of that decision-making level out of the marketplace. You just say, okay, I want exposure to commodities. I'll buy an index.
Whether or not global investors will have appetite for this new physical metals index, it seems Islamic investors will definitely benefit as Islamic banking solutions continue to diversify and grow. June Wrigley, 7 National News.
And in our fast financial news, the Arab Petroleum Investment Corporation, or APICORP, recorded a first quarter net profit of $95 million, up from $59 million in the same period last year. That is a 62% increase and the company's highest ever annual profit. Also, APICORP said it is looking to double its direct investment portfolio by the end of 2014. Emirates Group, the world's biggest airline by international traffic, posted a record net profit of $1.6 billion in its past financial year. That's a 43% rise compared to 2009. Revenues increased 26% to stand at $15.6 billion. And also Emirates' cash balance rose to hit a record high of $4.4 billion. And after the break, we will run you through what's making the headlines in international business today.